You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Well, hello again. Welcome to Talking Real Money, the show that, kind of talks about real money regularly. It's really pretty much what we do. We talk about money. We talk about how you manage it. We talk about how you invest it. We talk about how you plan for the future of it. We talk about how you avoid getting ripped off, how you can save it better, have the right emergency fund, get it into IRA, all this stuff. If it has something to do with money, we just want to talk with you about it, and we make it really easy to do so. All you have to do is just call us at 855-935-TALK, 855-935-8255. You can call that during the show, which airs from noon to 2 on the West Coast or 3 to 5 on the East Coast, or you can call 24 hours a day and leave your question, and we'll get that worked into the podcast. So all kinds of ways to get in touch with us. You can even send me a note right now to don@vestory.com, and I'll answer your question. So give us a call, 855-TALK, 855-TALK, 855-935-TALK, 855-935-8255.
You know, one of the things that does come up from time to time is how much money you have.
Well, it comes up all the time.
Well, no, I mean, I think the people. Well,
I'm always wondering how much money I have.
I know, but and I think we've talked about this. I actually have a spreadsheet, but I only put the numbers in there twice a year. I don't look every day. Hey, my 401k, because what happens is when you do that, it generally leads to poor decisions because you see things go down. And you say, I got to get out of that, move into something else, but your investments, the stuff that you do hold, you know, you should know what they're worth, and you should be able to access the money pretty regularly. When you start getting into stuff that you can't tell what it's really worth day to day and you can't get the money, that's when I get nervous.
You know, I have never, ever, ever liked illiquid investments. It's one of the reasons why I don't think real estate, and I get in arguments with people about this all the time. I have never been a big fan of buying individual properties as an investment unless, I'm going to throw my little caveat in, unless you're doing it as a business.
Now we're going to have to
business.
We're going to have to say the emperor has no clothes right now because you hold three. You got the Silver Bullet, then you got the place in Virginia, and you got the place in Florida.
The Airstream is not a piece of property. It is a travel. It
needs
trip.
one to sit there.
You usually just sit it on a state park or something. Okay. Two, I'm trying to sell the stupid house. I'm not owning them for investment. Trust me, they're not working out as investment
I'm just giving
properties.
you a bad time. You know that. So,
but there are a lot of people, and you see this a lot in the FIRE movement.
Yeah.
And I don't mean to criticize the FIRE movement, but I do actually, as an old guy, I still remember what it was like to be in my 20s and think, I'm going to build my wealth. And one of the ways that I tried to do that in my 20s was buying investment real estate. I actually did this in my 20s in Colorado Springs. Bought a house, paid little or nothing for it, fixed it up, actually flipped it, made a little money.
Yeah.
But
are you on late night television? Can I watch you selling this stuff, the program?
Well, here's the deal. It was hard work. It was a job. It was a real job. And when I did the numbers on how much I was getting paid for all the work I was putting in, the pay wasn't all that good.
So you moved to radio? That was a move up? I mean, come on, really?
Actually, no. Radio was a move down.
Okay,
when I was doing the houses, I was working for J.C. Penney.
That's right.
As an electronic salesman.
Companies. Yeah. Okay.
Yeah. And then I went to work for Dean Witter as a stockbroker, and I definitely stopped playing the house market. Then I went into radio and got divorced.
Talk about the double hit.
In part because I went into radio, because my income went from way up here to
Let's
how radio
not go
pays.
There. Let's just
how radio pays, though,
yes,
right? You do know how radio pays.
I've been around for a while, so yes, I am aware.
And Tom, and you should talk.
Yeah,
you got a brother and a sister.
Yeah,
who are in law. They've been making great money, and you were in radio.
I know. Well, every family needs a black sheep, man. Come on. Exactly. That goes without saying. Yeah. Can't all be successful.
My family, we were all black sheep except my one brother, who we called the white sheep of the family.
Everybody's got to have a white sheep.
Yeah, a white sheep. Give us a call. We want to talk about this illiquidity deal because there are a lot of investments out there that are being sold to you as high quality investments, but the problem is with illiquidity, you don't really know what they're worth at any given time. That's part of the problem, and there are other problems too that we will talk about after this. But we'd love to talk with you. 855-935-TALK.
Tom and Don are talking real money.
Most of you get really bad investing advice, but it's not your fault. The fault lies with the broken business model that dates back more than 100 years and some misguided investing attitudes. So, if you're ready to start investing and stop playing around with your money, you need to find a way to bypass the bad brokers and find full-time fiduciary advice. Funny, that just happens to be the name of our next free online class on June 10th at 11 a.m. Eastern, 8 a.m. Pacific. Do you know if your financial advisor is always required to act in your best interest? Are you paying them a huge commission? Do you have a fee-based advisor and know how much they charge? Maybe you have a hodgepodge portfolio made of a variety of hot tips and changing strategies. This is just a little part of what you'll learn during our Zoom class, Bypass Bad Brokers and Find Full-Time Fiduciaries. You can register for it free right now at TalkingRealMoney.com, TalkingRealMoney.com. In addition to banishing the bad brokers, we'll tell you exactly what you need to look for in a 100% fiduciary advisor. So save your spot at Bypass Bad Brokers and Find Full-Time Fiduciaries at TalkingRealMoney.com, TalkingRealMoney.com. Click on the event button. And by the way, if you're hearing this after June 10th, 2020, the event already happened, but go to TalkingRealMoney.com anyway and see if we have some other events coming up.
For your real life and real future, Tom and Don are talking real money.
Live from my high-tech cell, locked in a little room, but it's air-conditioned. That's good, because I live in Florida. 855-935-TALK. That is our phone number. We do want to talk with you about the money issues that mean something to you personally. That's what our main purpose is. But we're here to educate. We want to educate everybody as to how money works. But if you have a question, just pick up the phone. It's so easy. You can even say, hey, blank, dial 855-935-8255.
I don't know, blank never responds to me, but maybe to you, so I guess you're famous.
I found something really cool with Siri now, is I just say, hey, blank. I just don't want to say it because I know all of my devices will go off.
Yeah,
I just say, hey, blank, dial blank on speaker. And it dials it and puts it on speaker for me.
Wow. You are really high. I'm just lucky enough to know how to turn the computer on, so we'll leave it at that.
My phone's not working. Turn it on. Oh, 855-935-TALK. That's our phone number. Philip, it's your turn. Welcome to the show.
I had a question. You were talking about the Vanguard Total Bond Index Fund earlier.
Yes,
there seemed to be two parts that I didn't follow from A to B. A was something like you don't have any clients invested in it, but B sort of gave it a favorable review or talk about. So I was curious if I'd missed something or misunderstood something.
Yeah, no, that's a great question. So we have a small conflict on the show because we manage almost $500 million for other people. And we do not use.
Well, no, I wouldn't call it a conflict.
Well, but we don't use the same mutual funds there that we give you here.
Because we can't.
I know. I was getting to that. You didn't let me finish.
Yeah, but you use the word conflict, and it makes us sound bad.
Okay. It's all right. And you could. I won't put a judgment on it. When we talk to you here on the show, we try to make it very simple. We simply say. And by the way, if you want to spend more time on this, you want to get into Vanguard is a very long list of index funds. You can put together a 10-fund portfolio. You won't like this answer either, Don. You can go to paulmerriman.com and click on mutual fund portfolios, and he's got Vanguard, he's got Fidelity. See, there, I knew you wouldn't like that. But, Philip,
it's confusing.
For the show, purposes of the show, the purpose of time, the purpose of getting this done, we've learned over time if we give you 10 funds, oftentimes people say too hard to do. So in this case, we say one mutual fund for stocks, one mutual fund for bonds. The easiest way to do that at a very low cost using index funds is to go to Vanguard. For the stock side, on the Vanguard Total World, VTWAX. For the bond side, use the Vanguard Total Bond Fund. That's what we recommend to those of you listening to the show.
Suggest.
When you hire us, if you hire us, no obligation to do that. For the people who have, we use different mutual funds that you, Philip, cannot access because they're institutional share class and they're not available to you. Is that fair, Don?
Yeah, they don't. Here's the deal. We work with dimensional funds, and they use a lot of securities that aren't as heavily traded as others. So they don't want the general public to get into their funds and mess them all up like the general public is wont to do because people are emotional. They want a non-emotional approach to managing those. We need funds that you can get into, you easily. The other reason we suggest Vanguard funds in this simple portfolio is because most of the time we're talking to someone who has $10,000, $50,000, something like that to invest, and they're not to the level where they really need an advisor yet, a full-time advisor. So the funds are great funds. We would not have a problem using them. We just think the funds we use are, as I mentioned earlier, fractionally better. That they're either going to reduce risk just a little or they're going to enhance yield just a little, a teeny tiny bit.
And those fractions over time, and as you pointed out, with larger sums of money, can be substantial. Does that help, Philip?
Yes. Thank you very much. One other quick question, if you could.
Absolutely.
There was a fund you mentioned that was international stock, domestic stock, international bonds, and domestic bond, all in one. What was the name of that one?
That was
it was
Vanguard,
a Vanguard Target Retirement Fund. They have a variety of target retirement funds with different asset allocations based on the date.
Are they target date funds?
They call them target retirement funds.
Okay, so if you go to Vanguard.com, you can look those up or type them in online. The idea there is you put the money in, it's rebalancing the account to less risk as you get closer to or in retirement.
Right. The one we were discussing was the Vanguard Target Retirement 2035 with a man who was 50 because he'd be 65 and 35 approximately. And that had that allocation.
Okay. Thank you very much.
Thank you, sir.
You're very welcome. Thanks for being a part of the show. And we enjoy all of you joining us here on the program at 855-935-TALK, including Brian. Hi, Brian. Welcome to the show.
Hey, guys, thank you. Is there any feedback on this if I have the radio up a little bit or not?
I'm not hearing it, but
not now.
There's a bit of a delay because they never know what Don is going to say, so they have to run a 2 or 3 day delay on the program. But anyway, go ahead.
Yeah, well, I got 2 properties, my wife and I. I manage one of those, just a rental property, and it's getting down to where it's almost paid off completely. But as obviously, you can't get anything until you sell it. Well, that's my asking question is, how do I get some money out of that without having to pay interest on what I've already paid on before? Is there anything I can do to get some of that money out and not have to pay any huge interest rate, or besides a home equity line, maybe some kind of a management of a 401k where I can do my own thing?
I'm
throwing
totally
a lot
confused.
out there. That's a lot of questions.
I know. It's kind of a lot of stuff to think about.
No. But here's my question for you. Do you want to sell the property? Are you trying to avoid capital gains?
Well, we really haven't got capital gains here yet because I'm not sure what property to declare. I guess I was told before to take the one that has the best value and the best resale if we did sell one of the properties. But I'm getting close to retirement, about 2 years, so I just want to know, I need to be doing some strategies now that might...
Let me step back then. Let me step back then. Let me step back about 10 steps. What is your intent? You got these two properties, and they're almost paid off. You live in one of them? You live in one of them?
We live in one of them. Yeah, and we rent the other one.
And you rent
out.
the other. Okay. So it sounds like part of your question is, which one should I make my primary residence for my capital gains tax exemption?
Your one exemption, correct?
Well, one every 2 years, yeah. Is that part of the question?
That's right. That is part of the question.
Okay. Well, the answer to that one would be the one you want to live in. That would be my answer.
Or the one that's most expensive.
Yeah, or the one that's most expensive.
For reasons of taxation.
We're already in it, so that makes sense. We'll stay where we're at then.
In terms of the other one, because the question you're asking
what do you want to do with it?
Well, if we go to Arizona and move out of here...
Okay, hold on, because I'm still confused. Okay, hold on with me a minute. We got a quick break for just traffic and weather, which isn't very long. And then I want to focus back in on this investment property and talk a little more about that.
Tom and Don are talking real money.
If you're sick of your self-interested financial advisor and are looking for a 100% fiduciary low-fee investment advisor, call my firm Vestory at 800-386-3004 or visit us at vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Our phone number is 855-935-TALK. It is so simple, so easy, and the answers usually are easy, except in this case. Going to figure this one out, though.
Please do. Yeah.
Brian, we're going to forget about the property that's your primary residence. Now we're going to talk about the investment property. You have a couple of choices to make, and I think this might help focus on what those are. You can either, if you're done being in the real estate management business, you can sell the property, pay the capital gains, move on. You're going to pay taxes on it. 2, you can do what is called a 1031 exchange if you want to stay in, but you don't want to own this property. And you could go to Arizona then and buy an investment property there. You just have to identify it within a certain time frame. I think it's like 180 days. I don't remember. Haven't looked at it in so many years because real estate hasn't been hot like that in so many years. But you can do a 1031 exchange and roll your gain into the new property, so you don't have to pay it till later. Is that kind of what you're looking for?
That makes sense to me. I don't want to lose anything. I don't have to lose now and worry about that. So I have to sell the property here or just use it as a 1031 exchange?
Well, what you would do is you would identify a new property, or you would sell it, and then you would go to wherever you want to go to have the new investment property, and you would purchase that within that time frame. And I believe it's 180 days, but don't quote me on it because I don't deal with it enough to remember exactly.
It's longer if it's a government taking, I believe, and I think that's a 1030. Anyway, so in this case, yes, you have a period of time in which to buy a similar or like property. Yeah. That helps you avoid the capital gains tax you would have paid.
It is 180 days.
Yeah.
Yes, it is 180 days.
But other than that, I don't know of any other way to get money out of me, because what I heard you say at the beginning was sort of how do we take advantage of the equity in the home? I don't know any other way to borrow against it or do something other than that to get the money out.
You can't do a reverse on it. You could borrow against it, but you're going to pay a much higher rate because it's not a primary residence.
Exactly.
So really what you have is you either keep it and keep working it, you sell it and pay the piper, or you 1031 exchange it.
Gotcha. I appreciate that, you guys. Very helpful.
Thank you, sir.
Good luck, sir. Thanks for the call. 855-935-TALK.
And this is always the question about real estate. I mean, this is a great transition because
it's certainly on topic today.
Yeah, I mean, because
it's an illiquid.
Yeah, getting your money. I mean, because there's so many things out there where they want you to invest, and you can't get your money. We don't believe in those. We think you should be able to get it the next day.
Individual pieces of property are the same kind of thing. It's like selling. You don't know what you're going to get till you sell it.
Yeah, and so there's places, we just read about one, I forget the name of it, what the home whatever, or roof stock or whatever. I mean,
roof stock.
Somebody asked me about that.
What a clever name.
Yeah, where you're getting fractionally involved in properties in these various places, and you're making a bet that it's going to be hotter to own a home in San Diego than it will be Orlando. So I want to get, and you can get it as small as, I think it said, like, what was the smallest amount? $50 investment. So you can. I own homes all over the country, Don, because I own fractional, and I can't see an advantage to doing all of that. Again, if you really wanted to be in real estate and you want to do it as an investment, I would simply own a real estate investment trust, an index fund. That's it.
But something just came to mind. I don't know a lot about roof stock or this other one I can't remember the name of. Union something. There are all these companies now that are getting into the business of managing rental properties particularly for FIRE people.
Yep.
For the financial independence, retire early people. And roof stock and the other one, Home Union, they buy houses, investment properties. As a matter of fact, they claim on their own little website that you could make more money selling to them than you would selling traditionally because they don't hit you with the brokerage fees and.
But they're not the only. Zillow's doing that, I believe.
Yeah, but this is specifically roof stock and Home Union are specifically for investment properties. Not owner-occupied.
Makes sense.
So they know that business better, and
I would not be running out and putting my money in something like that. That's just
no. But I might look at them as a place to unload a property.
Maybe you should be talking to them then.
No, mine aren't investment properties.
Sorry,
855-935-TALK, the number.
Tom and Don are talking real money.
Did you know I wrote a book? Yeah, about 10 years ago, I wrote a book about investing. Financial Physics, with an F, How Money and Investing Really Work. It's a short read. It's a really easy read because, well, as you know, investing is way too easy to be this complicated. And it's been on sale for a long time at Amazon. I updated it in 2018 to a new version. But if you don't want to buy it, you can go buy it at Amazon. It's $10. But if you don't want to buy it, if you want it free, well, you can get it free two ways. One, you can get a PDF copy by going to talkingrealmoney.com/free. talkingrealmoney.com/free. If you don't put in the /free, you can't find it. The other way is if you have an iDevice, like an iPhone or an iPad or a Mac, you can go get an interactive version of the book, a special edition that I made that's actually interactive, that's got videos and motion and things going on, and that's also free. Just look for Financial Physics, FYSICS, in the Apple Bookstore or Apple Books or whatever they call it now. Or go to talkingrealmoney.com/free, talkingrealmoney.com/free. And I guarantee you'll enjoy the PDF or the iBook or your money back. Check it out, talkingrealmoney.com/free.
Reality radio for a really great future. We're talking real money.
One of the wonderful things about Tiggers is Tiggers are wonderful things. No, I'm going to get sued by Disney.
Wow, the show is really going to go off the deep end.
The most wonderful thing about equities is that equities and bonds and mutual funds, these kinds of things, we're talking about illiquidity. These things are liquid.
You can get your money.
Real estate, you can get your money, and at any given moment, really, or any given day with a mutual fund, any moment with an ETF, you can look and see exactly what the marketplace says those things are worth. They give you a value. It would be as if there was a big flashing sign on the front of your house that was adjusting. The price was like, oh, you're at $850,000 today. Oh, no, you're at $790,000. Oh, but you don't get that. You get that with the market. You don't also get that with a lot of these illiquid real estate investment trusts, these new wacky alternative mutual funds that don't trade publicly. I mean, what was the number? I noticed that, like, for example, we're talking about real estate. The Vanguard total, or the real estate index.
Well, the dimensionals of, global REIT is lost about 23% year to date.
And Vanguard's has lost about 20% year to date.
But Tia Kreff's real estate account, they call it the real estate account. Yeah. Somehow, at the end, I think, of last quarter, was only down 1%. Now, this is where because they don't price these things every day.
It's a matter of fact, in many of these, they don't price them.
I know
at most every quarter.
It makes me uncomfortable. By the way, back to your statement about the houses and the prices. One of my long-held contentions had been if they told you, imagine if you're driving down the road and Don McDonald's house is worth $472, blah, blah. If they told you that all the time, there'd be more panic buying and selling of homes because, oh, my God, my house went down by that much. But this makes me nervous that CREF has the TIA. They don't use CREF anymore, pardon me. TIA has this fund that it's mysterious.
It appears it didn't go down.
Yeah, and you had to. I mean, let's be honest with ourselves. Commercial real estate ain't, in today's common parlance, ain't what it's worth. What it was worth.
To be.
Yeah,
ain't
it's not.
What it used to
if
be.
there's one thing we can say out of the virus for sure, absolutely, there will be more people working from home. Right?
Yes.
That will mean there will be fewer offices needed. Yes? That will mean that the office space that's out there is going to be worth less. I don't think you can make it. I don't think there's any argument you can make about that. Period.
Baked into, you can see. You look at the Vanguard Real Estate Index and you see it's down 20%. It's baked in already. That anticipation of those, because it hasn't happened yet.
No.
They know it's coming, and we know everybody, you can't play it. You can't oh, now I'm going to sell real estate. No. It's already baked into the price.
The price is there. That makes me nervous about TIA when they tell you we've only lost 1%. Really? How could you only have lost 1%? That's not right. Or a non-traded REIT. There's a lot of those out there, right? And when you go to sell them, oh, by the way, that's down. That's down 31%, and you paid huge fees, and you paid a lovely commission to the guy that sold it to you. Sorry about that, because we just had the one not long ago, right, where it was down about 30% when she went to get her money.
And the other thing, a lot of investment advice firms decided to diversify their clients into these non-publicly traded REITs, into commodities funds, into consumer lending funds. And we are in a running argument with a number of firms that firms
we're not running, but we'll have the argument.
But they claim that they want that these things add said something positive to your portfolio, which I cannot imagine. For example, there's a fund out there. It's the Stone Ridge.
Yeah, Stone Ridge.
Oh, wait a minute. I can't remember the exact name. Alternative lending. Yeah, its symbol is LENDX, but it's not something that trades. It is only priced irregularly because the securities within it are consumer loans, which are difficult to value.
And how do you think that's going to look in 3 months, by the way?
Well, exactly.
That's
the point I'm making. Right now, consumers are defaulting on loans.
They're not going to pay you back. They don't have any income.
Right. They're saying,
20% of Americans are out of work? They're not getting, they got their one check, but no.
I can't make the car payment. I can't make the credit card payment. I'm going to make my rent, so I have a roof over my head. I'm going to buy groceries. What is going to happen? But the thing about Lendex is it hardly has gone down at all. But I bet the reality is far, far worse. You want only publicly traded stuff. Even if it hurts, at least you know what hurts when it hurts.
Tom and Don are talking real money.
Most of you get really bad investing advice, but it's not your fault. The fault lies with the broken business model that dates back more than 100 years and some misguided investing attitudes. So, if you're ready to start investing and stop playing around with your money, you need to find a way to bypass the bad brokers and find full-time fiduciary advice. Funny, that just happens to be the name of our next free online class on June 10th at 11 a.m. Eastern, 8 a.m. Pacific. Do you know if your financial advisor is always required to act in your best interest? Are you paying them a huge commission? Do you have a fee-based advisor and know how much they charge? Maybe you have a hodgepodge portfolio made of a variety of hot tips and changing strategies. This is just a little part of what you'll learn during our Zoom class, bypass bad brokers and find full-time fiduciaries. You can register for it free right now at talkingrealmoney.com, talkingrealmoney.com. In addition to banishing the bad brokers, we'll tell you exactly what you need to look for in a 100% fiduciary advisor. So save your spot at bypass bad brokers and find full-time fiduciaries at talkingrealmoney.com, talkingrealmoney.com. Click on the event button. And by the way, if you're hearing this after June 10th, 2020, the event already happened, but go to talkingrealmoney.com anyway and see if we have some other events coming up.
For your real life and real future, Tom and Don are talking real money.
Well, we do talk about this because no matter what's going on in the world, you have to deal with money. No matter what goes on in the world, you have to deal with it. We talked about, if you're at that point in your life right now where you can't make the payments on your credit cards or whatever it is, you still have to deal with it. You have to make decisions as to where the money you have is going to go, as to where you have to put it. And you have to determine what you need to retire. You still have to find a way to invest when you can, when you are able. And you have... Excuse me.
You got so upset, you're almost keeled over there. Wow, that was...
And you have to understand, this is so important, that there are a lot of idiots out there telling you to do dumb stuff. Dumb stuff. There are guys on TV telling you to do dumb stuff. There are guys on the radio telling you to do dumb stuff.
They have this other thing now called the internet. There's a lot of stuff there too. By
a lot of dumb stuff there too. Mm-hmm. We've talked about some of those in the podcast during the course of the last couple of weeks. Little Bobby Kiyosaki telling you to buy gold and Bitcoin.
It's not even that's horrible, which I think it is. Mm-hmm. But if you listen to the podcast from a couple of days ago or yesterday, the point is, he runs around and he makes all these random claims like that. Remember, you can probably remember when we had him on Sound Investing. We asked him, so how should people actually invest? Remember, he never would say, just go do this. You got to buy my blah, blah, blah. Well, okay. He's advertising for that is completely misleading. I had him on the television show because he had a piece in the Seattle Times that said, your financial future guaranteed. And then, of course, as soon as you get him on TV, he says, well, I didn't write that. The marketing guys write that. He doesn't stand. No, it's ridiculous. No credibility, period.
Do you know why? But here's the thing. Do you know why he won't tell you what to do?
He wants you to buy his book. He wants you to buy his tapes, his program.
No, there's more. There's even more.
Yeah.
Did you know that the Robert Kiyosaki Academy, the Rich Dad Academy, can cost up to...
How much?
Ready for this?
No.
$45,000.
But then you're going to be rich because you'd be flipping homes, I guess, right? I think that's what
something. I've never taken the class, but it has to do with buying property. And that's the thing, is that there are all these courses on buying property, on buying real estate, and they charge you, here's the deal, nothing. First class, free.
Always.
But I guarantee we're not going to tell you a darn thing. But if you come back for the weekend at $200, we're going to give you the secrets. And then we tell you a little bit. But this is not enough to really be successful. You've got to invest in your future. Now, what's your limit on your credit card? Oh, only $10,000. And I'll tell you what, do you have another credit card? I'll tell you what we'll do. We'll give it to you for $15,000 since you only have $15,000 open on your credit cards. We'll go ahead and charge those right now, and you can come to our Premier Academy and learn all the tricks that no one else knows. There are no tricks. There are no tricks.
And you know how many people follow him on Twitter?
What did you say, 1 million?
1 million. So when he says buy gold, silver, and by the way, the reason he says Bitcoin is because it's off the friggin' whatever. He loves that, which makes him sound kind of mysterious, like, oh, I got some secret here that you're never going to find out about unless you pony up the 40. Is it really $40,000?
$45,000.
That's
$45,000.
Yeah.
And then I look at some of these other things. I was looking, for example, at I was looking last week at a lot of the podcasts under investing on Apple Podcasts.
Boy, there are a lot.
But so many of them. In fact, I would say probably the bulk that claim they're about investing are about investing in real estate. And they tend to be a lot of these FIRE classes, these retire early classes. And they give the same kind of wacky advice. They're saying passive real estate. Buy houses or duplexes in your neighborhood or somewhere and make all this money, and they're throwing out numbers like 20% returns annually, which is absolute bunk. It may be anecdotally true in one or two cases, but there was a study done a couple of years ago by a university that found that the average returns, including appreciation, in investment real estate after all expenses were somewhere in the 5 to 9% range.
Scary.
That's the stock market, guys.
Yeah.
And it's not as much work. The stock market is just not as much work.
You really want to get into real estate, do this, I think you just go by the VGSLX. The Vanguard.
The VGSLX?
That's it, the Vanguard REIT fund. You hold thousands of REITs. You get it at about 0.2% a year. They do all the work.
And it's at a 20% discount right now.
Yeah, that's a good time to buy. Good point. So, yeah, this is more silliness, but
it's important because there are so many people falling for this stuff, Tom. And this is why I think it's so important to talk about. No matter what you want, you have to understand there is one thing you cannot have.
You mentioned this yesterday in your podcast.
Easy, quick wealth. You can't have it. You can't. It's not there. It's not available to you. Easy, quick, safe wealth. You want it, but wanting it and being able to get it are way different.
By the way, so it's all real estate on the investment shows. Remember what it was 5 years ago?
Bitcoin.
A little bit of that, but it was more how to get rich using Amazon. Remember, you had all those guys with their systems.
Oh, all those Amazon guys.
Yeah, and then remember we found the one that was in like Indonesia or something that was doing the podcast. It was like number one for a while.
Yes,
number
it was.
one, investing. That, as we say, ain't investing. So,
and you know what's funny is they're all gone. Yeah. Every one of those.
They clean that up.
Every one of those Get Rich in Amazon shows is gone.
Yeah.
I mean, just for your edification, okay, guess who's the number one podcast on Apple Podcasts in investing?
I think he's a radio guy.
Yeah, he's a radio guy. Dave Ramsey.
You can go ahead and say
which isn't investing.
No.
It's not investing.
No. And
number two is this Bigger Pockets podcast.
Don't know it.
All about real estate. These are all young men who are just hot shots in real estate. It's an alpha dog show, you know.
Got
real
it.
estate,
Mm-hmm. Yeah.
you know. And here's how they make their money: not flipping real estate. No, they sell you memberships on their forums.
By the way, that's where Bobby Kiyosaki's made all his money too. I'll bet.
I ran the numbers, and these guys, the number of members they claim to have, probably are generating for them $600,000 a month.
Wow.
Number three, I bet you can guess number three.
Jim Cramer.
Come on. You!
I got two of the three. I'm doing pretty well. I feel good about myself. You're really doing well. And let's leave it at that.
Number four?
I have no idea.
No, come on, number four. I'm going to give you the top five.
I don't.
Motley Fool.
Oh, okay. Yeah. Oof.
Motley Fool.
I read
and
their
then the
stuff
last
every
one
Sunday.
is another radio guy. Not about investing.
Oh, wow.
A money radio guy, but not about investing.
Oh, is it Clark Howard?
You got it. Look at that.
I did 3 out of 5. I like
3
Clark
out of
Howard.
5.
I like Clark Howard, actually. I like his work. But I don't know what he says about investing.
Not much.
Yeah, okay.
His is consumer.
I didn't know he was
stuff.
that big on
really
the podcast because I don't think he's on locally on radio. I don't think I could find him.
It's hard to find him.
Yeah.
And, wait, number 9. You're going to love this one. Number 9.
With a bullet? Yes?
Rich Dad Radio Show.
Oh, gosh. Really? He's number 9.
Yeah. Number 9.
Oh, he's, wow.
He's got.
It's not a live thing, though. He just sits in his basement and records it.
These are podcasts.
Yeah. Well, Clark probably takes his radio show and turns it into a podcast.
He does. Yeah. We take our radio show and turn it into a podcast. Mm-hmm. We do that a lot.
You want to learn the truth about all this stuff? Come to the class and quit messing around trying to get rich.
I'll tell you more about the class. I'll tell you about it. Yeah, just go to talkingrealmoney.com and click on the event button because we got a class coming up on Zoom. But I'll tell you more about it after the break. Remember, give us a call 24 hours a day, 7 days a week, though, if you have questions you need answers to about money. 855-935-TALK.
Tom and Don are talking real money.
If you're sick of your self-interested financial advisor and are looking for a 100% fiduciary low-fee investment advisor, call my firm Vestory at 800-386-3004 or visit us at vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Our next class is about bypassing bad brokers and bad advice and finding fiduciary advice. It is free. It's on Zoom. It's coming up on June 10th. We're doing this one in the morning so you can get it done before the workday. Just go sign up. It's free. It's easy. Sign up right now at talkingrealmoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. Are we done now?